The following is a presentation of TFNN.
Let's go to our man John from Jacksonville. John, you still on the line with us?
I'm here.
Hey, thanks for calling in.
You're welcome. I'm glad to be here.
You are wonderful. What did you want to look at? Or
No. I just want to give you a big slobbery virtual kiss.
Oh.
I can't tell you how excited I am about your system. I can't tell you how much it's meant for me. I made $23,000 in about a month's time with your system. I do not have one single position that I've lost money on.
Oh, you're too
I
nice.
am just stunned. I am a moon lover.
It is now time for The Trader's Edge with your host, Steve Rhodes.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good day, traders. Hi, folks. This is your host, Steve Rhodes, and welcome to the Trader's Edge. I'm coming to you live from the TFNN television and radio network, folks. Now, you can catch this show live by going to the homepage of TFNN, clicking on Channel 1. You'll be able to follow along with every chart that I've got. If you've got a stock, you can give me a call. I know we've got a bunch of listeners out in Spokane, Washington. You can give me a call. Even if you're in your car, you can go back to the archive of my show, and you'll be able to take a look at exactly what I'm looking at from a technical trading standpoint. And folks, I absolutely love being here with you. This is truly the best time of my day, the best time of my life. And, you know, I know the value of your time, and I appreciate your presence here today, and I'm honored to have and privileged to have the opportunity to serve you. So give me a call at 877-927-6648, and we can take a look at any stock that you want. Right now, we've got the Dow is up 173. You've got the composite up 65. The S&P is up 24, and the small caps are up 20. The small caps are actually leading the charge right now, up a little bit above 3% of the way. And if we take a look at right now what I've got up on my screen, folks, is I've got the Dow. And you can see the Dow right now, we're trading at about 10,992. In the area that I've got cordoned off, if you will, where I see this as the lines in the sand, if you will, the first battle that's going on, is the 10,965 and the 11,079. Now, what the Dow is traded to today, the high on the Dow has been the 11,052.49. What we're really looking for the Dow to get over that 11,079 area. That's at least what I am looking for. And that doesn't mean that our troubles are over. That is absolutely not at all what I'm saying. But and if we just get to that 11,079 and we close back below, to me that's not a real good sign. In fact, that's a very poor sign. And we'll have to just have to do some judgment calls with regard to any of the positions that we have in the marketplace and what we're doing. So that is on the that's on the Dow. If we go take a look at let's take a quick look here at some of the other charts. Let's take a look at the S&P. So if we take a look at the S&P 500, you can see, and folks, what I want you to really understand the importance of each day's bar. And even if you don't know anything about technical analysis, you know what you can do. This is the first place to start, because we've got so many different contributors here that use different systems. But there's a wealth of, I don't know any other place in the world where you can get this type of technical knowledge. And each of us on a daily basis, if you listen to the show, listen to the archive show, you can get us on your device at tfnn.mobi, and each of us will have a tidbit of information that will help you in your trading career. And in fact, folks, if you're looking for ways to improve your trading career, what you want to do is you want to go to the homepage of TFNN. Under Breaking News, there's a free webinar that I'm going to do next Wednesday from 6:30 to 7. So it's 30 minutes of your time. All you have to do is come over. You just give your name and your email address, and then just click on a confirming email. That will come to you. And what I'm going to do there, folks, one of the things that I do is I'm a master of probability. I'm a numbers guy. I've been a bean counter for over 30 years, although I don't, I don't really, I mean, I can, from a fundamental standpoint, I don't care whether you're a public company, a private company. I can run rings around most folks in the business. Certainly can keep up with the best at that game. And what I've done is I've taken the master of math. And what's really cool about and why I got so, there was a stage, folks, where I didn't know anything about technical analysis. All of my analysis was fundamental analysis. Take a look at balance sheets, take a look at income statements, understanding, rate of return, take a look at working capital. And what was happening is I would be in stocks, and the stock would just simply, what I call, fall out of bed. When I went to sleep at night, maybe it was trading at 50. I woke up the next morning, it was trading at 20. And you would say to yourself, how can that happen? I knew that the company was fundamentally strong. There were companies like that, Hanson Natural, all kinds of other companies, Red Hat. I mean, I could go through a list, probably if I go back through my old stock portfolios, and I really wanted to understand why. Because there was obviously, the question was there something fundamentally wrong with my analysis, or was there something else in there? And that's what led me to technical analysis. And one of the things that you first can do on any kind of chart is just simply volume analysis. Because volume, folks, is really where, when you're taking a look at a daily volume chart or a weekly volume chart, what that's really helping you to understand is where you've gotten some large institutions to come in and take a position. Because when you've taken a position in that stock, if you hold on to that position, you're going to battle for it. If the stock is pulling down, you're going to have an area of support where you're going to go out and support that stock. Or you're just simply going to go ahead and mark it down and sell it. So you really want to understand volume analysis, and you really want to understand, what these bars mean. And when you take a look at the S&P, you can see we've had the last 2 out of 4 days have been these long-range bars done. Folks, that is telling you some major destruction. Now, of course, that's nothing new. If you're taking a look at your 401k accounts, whatever it is, maybe that's nothing new. But, there's plenty of charts where you're going to go back and you're going to go take a look at the left side of the chart. What's happened in the past? Because, folks, how do you know where you're going to if you don't know where you've come from? And see, the whole key to that is understanding how to be able to read a chart, reading the left-hand side of the chart. Now, what I do, like in my webinars, is I'm teaching you the probability management of dealing with the right side of the chart. And that's because I've gone back and I've analyzed, if you will, what's going on with the left side of the chart. Understand where there's some support and resistance, understand where we're winning the battles or losing the battles, understand where a stop should be put in place, because if it trades below that, then there was something wrong with the complete analysis, or maybe there's another piece of information that somebody else knows internally that we don't know. That happens all the time. And you just simply want to take your loss. There is nothing wrong with taking a loss. Absolutely nothing wrong. That's part of trading. That's part of business. Whether you're in a sales business and you're making sales calls, you've got to, I think statistically what you have to get 8 no's before you get a yes, and that's really from the same person. I will tell you that some of the most successful things that I have ever accomplished in my life wasn't by taking no from that person and going on to the next person. It was taking no from that person and continuing to go back. In fact, some of my best business relationships were because of being able to persevere through that. And you need to apply that in your life. If you've got a focus, if there's something that you really want to accomplish in life, folks, you can't let things get in the way. The universe, the world, is going to throw hurdles at you. Those are nothing more than little tests. Those are tests to say, just how badly do you want this thing? Just how badly? And think about your experiences. Think about some of the great breakthroughs that you had, or maybe something it is that you wanted. Maybe it was a business deal. For me, because I'm such an entrepreneur, I take a look and I equate a lot of things that way. Look, folks, I've owned stores at Walt Disney World. I've done things that nobody else has done with inside Walt Disney World. Not that people haven't owned stores there, especially Epcot Center, what have you, but I actually used to have my own kiosk with inside the World of Disney store. Most folks that have stores out there are contained within their 4 walls. Okay, so it's a separate store. Nobody else out there had a location within inside a Disney store. My employees were working there side by side with the Disney folks. I had a store at the Disneyland Castle. I didn't get those things, folks, because one day I had an idea, and I knocked on somebody's door, and they said, "Steve, we've been waiting for you." Doesn't happen like that. I had at least 6, 7, 8 no's. But you know what? Those people knew that I had a product, They knew that I wanted to be there. They knew my background. And all of a sudden, the universe created an opening at a time. And as soon as that opening came, boom, right through it. It's the same thing in trading. Same thing in technical analysis. Same thing in fundamental analysis. And so, you know, if you're here right now and I value your time is worth way more than your money. Because your time, you can't get back. Your money, you can get back overnight. Think about all the folks that actually were short this marketplace from October of 2010. I know there's plenty because some of them are my subscribers. I've talked to them. We've talked about holding on to your losses for too long. We've talked about at least getting a stop in place. Well, folks, you know, you want to understand technical analysis. And an easy way to do it, and I'll do it in a very straightforward manner, just simply go over to the front page, sign up. It's 30 minutes of your time. I'll make it more valuable than any money it is that you have. Plus, I'll teach you how to make money and help you take a look at maybe some of the positions that you have. So when we're taking a look at the S&P 500, folks, one of the things I'm showing on my screen here is I'm showing, you know, where this actually retraced to. And I'm going back again to those August 2010 area. Now, the reason why August of 2010 is so important is, one, it's where the market really took off. But it took off because of the liquidity event of the Federal Reserve when they decided to go into QE2. Now, what you really want to get your head wrapped around is you want to understand these liquidity events because they do happen in the marketplace from time to time. In fact, probably during the next several years, we will see liquidity events happen more often than not. Why? Because we've got sovereign governments that are broke, you know, ours included. We've got municipal governments that are broke, the ones that you live in, the ones that I live in. And so there are going to be all kinds of debt-related issues that have to be resolved one way or another. Typically, when you have such a substantial amount of debt, the only way to really resolve it, well, there's two ways. You wipe it out, you renegotiate it, you extend the terms, or you find some way to grow your way out of it. Now, growing your way out of it, that's the one that I would like to focus on. I think there are ways to do it. I don't hear anybody in Washington or any place else really talking about how it is that we're going to grow our way out. Yes, we can go ahead and cut expenses, but absolutely you will never be able to cut enough expenses to go ahead and take care of all of our current debts, all of our obligations that are coming due. Instead, we've got to take a look at how we become more resourceful. And that's really what this show is all about. That's what everything is all about here at TFNN, is finding out ways for you to become more resourceful. And it doesn't have to be my webcast or my webinar. It can be Don Kaufman if you want to understand, and he does a great, one of the best guys out there from an educational standpoint as far as teaching you about options. And or you've got Basil, you've got Tom, you've got Larry, you've got Bud, you've got David, all incredible individuals, all with incredible systems, techniques, and so you really want to be able to check into that. So right now we've got the Dow up 171, composite up 64, and again, we're taking a look at this S&P chart here. That 0.786 that I've got listed there, that's one of our floors. So what I teach you is there's basically three primary pullback or retracement floors. There's the floor number 382, floor number 2, which is the 0.618, and your third floor is the 786. Market hasn't made it all the way back down there, but it's pretty close. Folks, give me a call, 877-927-6648. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Extorre Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. Extorre is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make Extorre one of the highest margin operators in South America and a sector leader in the mining industry. Extorre has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about Extorre Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648. I'm Steve Rhodes, your host at the Trader's Edge. And during the show, Tom and I do a show from 10 to 11, Monday through Friday, called the Money Masters. So if you just tune into this show, tune in and watch Tom and I on the Money Masters show. Now, there were a couple callers that we just didn't get a chance to get to, and so I was going to go ahead and take a look at their stocks. We had Marvin that was calling in that wanted to take a look at Bank of America. The symbol on that is BAC. So that's what I've got up on my chart. Now, one of the things, and I've got a weekly chart, is what I've got up. Now, this is a weekly chart. Remember, in the last segment, I was talking to you about these wide-range bars. So if you go back and you take a look at Bank of America as it was coming off of its highs in the November time frame, and the high there, what I'm looking at here, was actually September 08 that made a high of about 39.50. And you can see that, you know, you had this kind of this large wide-range bar on the way up. Now, the volume that you had there, and this is on a weekly basis, the volume that we had here was 1 billion shares, 1 billion shares. Now, you can see this wide-range bar when it came down. When it came down with about 1 billion shares as well. But you want to really pay attention to those bars. Why? When you just take a look and you take my little crosshair and I put it across the bottom of basically those bars, you can see that that's where that's where Bank of America had traded up to, during the last couple of years. It never was able to get above that. It's telling you about all kinds of price destruction. That's why it's going to be really important for us to be watching as far as what goes on in our markets, because all the worldwide markets, because there has been nothing but major destruction when you take a look at volume, when you take a look at those wide range bars. So now let's get back into Bank of America on maybe a more current time frame, if you will. And what Bank of America did, now what I teach you are kind of the ABCs and these different levels, these floor levels, these retracement levels. And if you go back to Bank of America and you look at the week of April 16, 2010, the high that Bank of America made there was 1986. It traveled downward, and we call that our B point. Well, it traveled down to December 3rd of 2010, where it made a low of 1091. Well, we call that distance, we call that our A to B. And you can figure out what that price is. I can't see it off the top of my head here. Maybe that is about $8.98. What Bank of America did was it retraced back. That's what we call it. Now, I'm just going to draw this in on the weekly basis. Give me 1 second here. Looks to me like it's probably about a 0.382 retracement. Remember those floors that I'm talking about. And you can see the 0.382 was just slightly above that. 382 was 14.33. Where it traded to was $15.31. So that became what we call our C point. So we talk about A to B, that distance, is equal to C to D. Now, typically, you'll do a 1-to-1, A to B equals C to D. When you only retrace and you only go back up to that third floor, that 0.382, and the way I take a look at it, because I live here in Florida, we've got hurricanes or water spouts, and anybody in the Midwest, you've got these different tornadoes. And I take a look at, just think about a rubber band going around a pencil, if you will. Just keep winding it and winding it. And if you only back it off 0.382, and then you let it go, you're going to have a big move. Well, it works the same way when you're taking a look at technical trading in these markets. If you back off that rubber band to the second floor that we have here, called the 618, it'll move, but it won't have that same power that that 0.382 does. And then our third level is at 0.786. So understanding that helps you to understand the move. Now, on my charts here, when I draw an A to B equals C to D, what happens, folks, is that I maintain the same angle of the line of the A to B along that C to D line. Because what you want to take a look at is if the price, as you're moving down in the C to D, is right on that same axis, that's telling you that maybe you're more likely to do maybe a 1-to-1 versus, in ABCs, folks, you can do more than a 1-to-1. Oftentimes you can do 1-to-1, 1-to-1.272, 1-to-0.618. In this case here, you can see that the price on BAC was actually traveling outside it. So the price destruction on the way down, if we want to call it, the retracement on the way down, that A to B leg, was stronger than on that C to D leg. Now, it was that case up until the last 2 weeks. In the last 2 weeks, boom, it came crushing down. Now, here's the cool thing. The price projection of A to B equals C to D was $6.33, or $6.24, $6.33. $6.33. What did BAC get down to yesterday? The low was $6.31. $6.31. Now, we started out at $19.86. How does that work? Actually, I don't know how electricity works. What does it matter? All you need is, but I know that I use electricity all the time. Well, I use these tools all the time. When it backed down, folks, you know where it backed down to? That 0.786 area. That's what we call a Gartley pattern. That was a Gartley buy pattern. And you got to be careful because of the volume of these last 2 weeks, but that was a Gartley buy pattern. So we'll see if BAC can bounce from here. Folks, 877-927-6648. Give me a call, please.
Yeah, it's always better when we're together.
Volatility is key to any active trader's success. In today's market, volatility is king, and Tom O'Brien has been capitalizing on this market in both of his newsletters. For a brief 10-day period, we're opening up a 2-week free trial to both of Tom's newsletters to all listeners. Now is the perfect time to see how Tom uses volume analysis to capitalize on this trader's market with epic volatility on a daily basis. From now till August 10th only, you can sign up for a free trial to Tom O'Brien's newsletters, Market Insights, and the Gold Report, even if you've had a trial subscription previously. Usually this offer is only open to new customers, but we're so excited about the current market and the opportunities presented that we're opening up this offer to all returning customers as well for 10 days only. As a trader, now is the perfect time to act. Log on to tfnn.com today and you'll see a link directly on the front page for your 2-week free trial. Don't miss out on this one-of-a-kind opportunity in this one-of-a-kind market. Act today.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
We have Earl Bush on the line, the winner of today's Great Panther Silver Summer Silver Giveaway from Palm Harbor. Earl Bush, how are you?
Hi, how you doing?
Oh, I'm doing great. So your day, I assume, is made now that you've heard that you've won a great silver coin?
Oh, yeah. Probably the best trade I've made all week.
All right. Well, that's great. You've been a listener to TFNN. You're familiar with TFNN.com and Tom O'Brien, all that good stuff?
Oh, absolutely. I'm a dinner, and I'm into this every day.
Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. And let's go to our man John in Orlando. John, thanks for calling in.
Hey, Steve, how are you?
I'm doing great. How about yourself today?
Doing fabulous. Hey, looking for an entry point for the SPXU.
Yeah, so you're trading the futures contract. And so, you know, what are you what tools are you using to trade with?
Your tools. I'm listening to you guys.
Okay. So, you know, the trade on that, folks, and we're talking about, and what I've got up on right now is I've got the ES Mini contract up here. And actually, the trade on that took place fairly early this morning, if you had the cojones to place that trade. And what I'm talking about there is because, you know, the markets, as you know, we're all over the place, you know, up and down, like an incredible, I don't even, you know, I hadn't seen anything anything like that volatility in quite a while, because from one moment to the next. But what it did, and I'm going back here and just taking a look at the swing low in the June 17 time frame, and it was 1258.50, all the way up to the high that we made on the July 8th, July time frame, July 7th time frame. And folks, I talk about the Fibonacci contraction a lot. Those are those three floors. Well, there's some expansion floors that you want to be able to understand and take a look at. And those expansion floors are your 1.272, 1.618, 2.0, 2.618, and pi, 3.14. Well, typically you don't get to pi. You do in extended markets, you do in extended stocks like Apple and things of that sort, maybe Amazon. But typically when you see a 2.618 expansion of your most recent swing point, that's a pretty good indication. I talked about, John, you probably heard me talk about that rubber band. That's really talking about that rubber band really going around and almost to the point where it's going to snap. And so that 2.618 was 1,086.81. And where it got down to in the overnight hours was it got down to 1,077. So that would have been, the first place where you would have been taking, a look at making that trade. Right now you're at 1142, and so let me just pull up this onto just a 10-minute chart. Just take a look and see what's going on out there. And what it's really trying to do here is it's trying to make an ABC up. We were talking about those ABC patterns. We were doing the Bank of America and how it got to the ABC within really about a penny or so. And right now, and this is just simply on a 10-minute basis, this is trying to get into the 1167.04 area. And the top is at 310 this morning, where it was at, the high on that was around 1148. It's trading at 1142.50, and it's inside that candle now. To me, this is not a place where I would be looking to add to a trade. If this thing pulled back, okay, which was your question, if this thing pulled back to around 1096 to maybe even, you could look at, give me a second here, maybe the 1107 to 1096 area would be pretty nice. I don't know that it will pull back there or not, but that's what I would take a look at, John.
Okay, great. I appreciate it.
No problem.
We'll keep an eye on it.
Okay.
Thank you.
Yep, thanks for calling. Let's go to Mike from Massachusetts. Mike, thanks for holding.
Hey, good morning, Steve. How are you today?
I'm doing great. Yourself?
Very good, sir. Hey, I want to get your take on TMV.
Okay.
The recent run in bonds, I think it's time for a little reversal action. What are your thoughts?
Well, folks, and what I'm going to do here and take a look at the bond trade is I'm going to go over to the TLT. That way you can follow along. You can pull that up on your chart. And what Mike is trying to play here is the direction three-time bear trade on this. So Mike is looking for a pullback here. Now, when we take a look at the TLT, and it's interesting how how this all works out. And yesterday we were talking about, or early this morning, Tom and I were talking about how the debt was downgraded, but everybody was going into bonds. So do me a favor, Mike, stick with us. We'll go right to you when we get back from break. And folks, you can get in line too, 877-927-6648. Give me a call, please.
Well, it's always better when we're together. Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. And before we went to break, we were talking with Mike from Massachusetts. Now, Mike, do you trade the TMV fairly often? Are you an active trader in front of your computer screen pretty much all day? Or you?
Yep.
Okay, good. Because, folks, in order to trade this, you got the triple, and with the volatility that we've got in the marketplace, you know, if you're trading these, you really want to make sure you're near your computer, or you've got to have a stop in place. And, you know, Mike is looking at, you know, what is a really interesting trade here because of the run-up that we've had into the bonds here. And where it's at, if you just simply go back on your chart and you go back to the high that was made at 109.34, and again, I'm on the TLT, and that was made on August 25th. You know how we keep going back to referencing that August 25th time frame when we had the last QE2. Now, look what happened the last time we had the QE2. We went from 109.34 all the way down to 88. So one of the things that Mike would be playing today, right now, knowing that Ben Bernanke is going to come out at 215, is one of the things he would be playing as kind of a news event, because there's nothing in the charts here to give us any indication technically that we should go short, other than the fact that we've come up to that 0.786 level, that third level. But the problem is, the way that we came into that level, we came in there with those wide range bars, and we did it with big volume. And so, you know, this is very volatile. So to answer your question, Mike, you know, putting in a trade right around here would be okay, but you can't give it much room. And you're going to really have to be paying attention to what's going on at around 215. And if somehow your stop didn't get taken out, you know, you've got to be prepared to take a little bit more of a loss than you would. Now, if I go ahead and pull up the TMV, folks, so let's take a look for Mike and see what we're really talking about here. Right now, the TMV is trading at $26.33. You know how we talk about expansions? Well, when I take a look at expansion of the swing points, if I go back to that same August 25th time frame, all the way up, which was at 31.34, all the way up to the high that it made, it looks like around 51.14, maybe it was a little bit higher than that. The 0.786 retracement there is $25.95 in that range. Trading right now at $26.33. So, Mike, you don't have to give this much room. There's no reason for it to get below yesterday, which had a ton of volume. The low on yesterday was 25.37. So if you want to take a stab at it right now, you know, I don't think you have to give it more than maybe, I don't know, a buck or something like that below yesterday's low. And just make sure in that 215, you know, 230 time frame. And look, the first move often is the opposite of what takes place. So sometimes when these news events come out, in that first 2 minutes, don't get, you need to take a look at a little bit longer term time frame, but keep that stop in place. Is that what you were thinking? Is that what you're looking at?
Yeah, I was debating whether to wait for the 215. What would you, if it does go, what would you give it for an upside target?
Well, I'd say that first area that is probably you'd be looking at is somewhere around that 34 area. And if you just took a look at, I'll give you a couple spots. So 34 is one that I would be looking at, and I just used another tool, and that came up with 34.15. So we got 34 twice, if you will. Let's take a look at this on a conservative basis. I would say what you would be looking at is 29.70. So, on these triples here, and that's really nothing more than the dead cat, the 0.382 retracement of this last move down here, going back to the July 26, July 27 time frame. So it's a good trade for sure, but it's one that is, you're better off being a day trader. And really, folks, what Mike's talking about as far as waiting, should he wait until the train leaves the station, or should he get on board right now and have a cup of coffee? Something like that. Right? Isn't that really the decision?
Good analogy. I hear you.
Yeah, and the problem is when the train leaves the station, sometimes it's going to leave without you if you're a little too late.
Well, that is kind of a fairly good risk reward with a stop right below 25.25. So
it is. It's just the the volatility that we've got in this marketplace. That's why I asked if you're near the computer. And, you've got to be near your computer today at 2 o'clock. Because,
these things fly. I don't even go to the bathroom, Steve.
Yeah. and because the news event here, and again, I'm not going to place a whole lot of emphasis other than, look, yesterday you had the president come out, and I never even really I didn't get a chance to see what it was that he said, other than through how the market reacted. So that's really all that I was interested in, was watching that. And we could have a similar type of reaction today.
Yeah, you didn't miss much yesterday, then.
Yeah. Well, the market sure didn't have.
That was terrible.
Yeah, that was not a vote of confidence at all.
And they kept delaying the news conference, figuring there's going to be some big announcement.
Is that right?
And he just basically said, wants more tax increases, which the market. Well, we saw the market's reaction to that.
Absolutely, absolutely. So and when we take a look at these indexes here right now, they're not showing any sign of conviction if we take a look at the U.S. markets. Now, the foreign markets, that's a little bit different thing. Right now, you've got the DAX is up 9 points. So it has regained all of its losses from overnight, and the losses were massive. And if you take a look at the FTSE, I think the FTSE was down 300. It's now up 106 points. So, and if you take a look at the Nikkei, if you take a look at the candle pattern that it formed today, it was a hammer candle. Those are things that you typically would see at bottoms. That doesn't mean that it doesn't get tested. But, if we take a look at what the worldwide markets are saying, and when you take a look at the Fed, you wonder, and when you take a look at what's going on in Japan with the yen, and this is a currency issue that we've got going on here. And so, worldwide currency issue. And so you got to think that all of these finance ministers are having some types of conversations with each other to try to figure out how do they put the skids in here. Now, long-term, folks, I don't think, I think this is just the prelude to what it is that we're going to see here for the next 14 and a half, 15 months at least. But at least for the next 15 months. So what you really want to do is you really want to understand that this is a trader's marketplace. This is not, the buy and hold might have been March of 2009 when nobody wanted to own anything. But the cycle that we're in right now, it is not a buy and hold strategy. And so, you want to, if you what you really want to do is you want to come over to TFNN. You want to get Tom's newsletters for free for 2 weeks. You can get my newsletter for 30 days, money-back guarantee, David's newsletter. I mean, you really want to do that. But, Mike, thanks so much for calling. That's a trade. I think you got a good trade. You just got to have the just stay by your computer, my friend.
Thanks, Steve.
Okay, thanks for calling. Folks, 877-927-6648. Give me a call as we go and glide into our last segment. Take care. All right, we'll be back in a minute.
It's always better when we're together.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. I'm your host, Steve Rhodes. This is the Trader's Edge. And, folks, I want you to stay tuned for our next show coming up. It's Don Kaufman with Thinkorswim. Absolutely one of the best option shows that you could, even if you don't trade options, what you want to do is you want to listen in. Maybe you want to give them a call, have a question or what have you. But absolutely one of the best shows out there for trading options. Now, let's go take a look at, maybe during the last segment you heard the commercial for David White, his technology letter, a good friend of mine, and absolutely brilliant, a brilliant individual. In fact, he's got, if you're looking for software packages, what you should do is you you should try timing the trade charts. I own 2 copies of Timing the Trade Charts. They weren't given to me. I invested in those copies. In fact, probably one of the first subscribers when he first developed the software. And I know he's got a new release that is coming out soon, if it's not already out. And just really an incredible mind, really a great trader. And he was in the office on Friday, and he was telling me about taking a look at UNG, natural gas there. And the reason why I bring that up is because, David also uses some fundamental. He uses the power law vector indicator, but he also uses some other fundamental. And he told me what was behind, the trade that he had here. And right now, you've got the UNG up at 1017. It's off the bottom. And folks, go and subscribe to his newsletter. Another great newsletter as well. Try all these things out and see which ones fit for you. You've got to, folks, you have to have tools in your tool case, in your toolbox if you're trading these markets. You just absolutely have to because number one, it'll help you get from point A to point B much, much faster. And in the age of technology, that's really what it's about. When you're taking a look at rapid learning, you need to be able to do that. You need to be able to have somebody help you understand, what this information means. And that's what my show is all about. And you can get me on Tuesdays and Thursdays from 11 to 12, and you get me Monday through Friday co-hosting with Tom from 10 to 11. Now, let's go take a look at what's moving out there. We've got Google is up $20, a little over $20. And on Google stock here, we were talking about those AB equals CD. Well, if you take a look at the last leg up on Google, what we were doing was we were taking a look at the low that it made. And when I say low, when we take a look at these charts, we're taking a look at visibly areas where there was a low bar. We call those swing points. And the swing point, the low on that was June 27th. It was down at 473.60. Let me see. The following day it was at 473.60 as well on June 27th. That was our A point. That B point was all the way up at July 7th. The high there was 550.68. That was a 77-point move. 77-point move. When this thing backed off, it didn't back off much. Let me take a look at it. Where it backed off to was just above that 0.382. So that meant that rubber band that it had, that it was winding, that was the energy source, if you will. Well, what happened was after it did that, it took about 4 days before it took off. It took off on July the 15th with huge volume. It had 13 million shares when it traded, created this huge gap. Now, the 1-to-1 ABC would have been at 603.21. But because of all that volume, because of all that energy, folks, when it crossed that B point with more volume, that told you that it was more likely going to do a 1 to 1.272 or maybe a 1 to 1.618. Well, the 1 to 1.272, folks, was 624.31. Where do you think it got to? 627.50. Actually, the day before that, it got to 625.41 within actually $1.20. So within a couple of bucks on a $600 stock. This is why you want to learn the power of ABCs. You want to learn these retracement areas. You want to also learn that what Google was likely going to do was it was going to pull down and fill that gap. And that gap that's still open right now, it looks like it's trying to get back maybe into the 542 area. Anyways, folks, thanks so much for being here. Loved it, and have a great day. Tune in tomorrow at 10 o'clock to catch Tom and I and the Money Masters. Have a great day, and stay tuned for Don Kaufman. Take care. Bye-bye now.
Yeah, it's always better when we're together.